how things change in the world of property. It wasn't that long ago that the media was telling us that we're in for even further property price falls. Some commentators were suggesting significant further price falls. And look what's in the media today. So many people are asking, how do we pick the turning point in the property market? Is it too early to get in and buy countercyclically, or is this the right time? At the end of this show, you're going to understand exactly what to look out for to pick the property market turning point, and you'll hear my views on buying countercyclically. Because in the first segment, I'm going to talk a bit about exactly what I'm researching to see when the market's going to turn. And I'm also going to spend some time teaching you some lessons that I learned in previous property market downturns. And in my mindset moment, we're going to have a chat about fears. Look, let's be honest, we've all got them. And for some of us, they're holding us back achieving what we want to achieve. So lots to cover. Welcome to today's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
Are we there yet? Isn't it amazing how the messages in the media have changed in recent times? It wasn't that long ago that the media was telling us property prices would fall significantly further, with some property pessimists suggesting we could see a peak to trough decrease in home values of around 20%. Now, I know some were saying 40%. I'm not even paying attention to those. But today, the common theme is that the property markets are going to turn later this year or early next year. And many are asking, have we actually already reached the bottom? Are we there yet? But as they say, no one rings a bell when we reach the bottom. So how do you pick the turning point in the property market? Well, my suggestion is you don't even try to pick the bottom, because even the smartest economists armed with all the data can't do that. Instead, if you're a home buyer or a property investor and you've got your finance organised, in my mind, now's an ideal time to purchase your next property, purchasing it countercyclically, knowing your downside is minimised and your upside is maximised. However, there are some indicators that the research team at Metropole watch carefully, looking for a signal that the market could be turning. So let's have a look at those so you understand as well. The first thing we look at are the economic fundamentals. Of course, our property markets don't work in isolation, so we keep an eye on the macroeconomic factors, such as how the world economy is going and how Australia's economy is going. We monitor things like GDP, gross domestic product, how much we perform, how well we're performing. We monitor inflation, we monitor wages growth. Now, all of these are likely to underperform for the next little while. They're going to remain below the long-term averages, but we're still in the positive mode. We're in second gear, third gear. We're not going into reverse. And at the same time, the research team at Metropole keep a watchful eye on unemployment levels. And sure, they're creeping up a little bit at the moment, but unemployment probably won't get to have a 6 in front of it. Last time we had a big recession in the 1990s, the unemployment was at 13%. Okay, so we're talking about the fundamentals that we monitor to see how the market's going and to pick a turning point. One of the important ones we look at is finance, because we recognise that our property markets really are driven by finance, the availability of finance, by affordability. So we keep track of the Australian Bureau of Statistics data on credit growth. That's what I call a leading indicator, something that turns positive before the markets do. Now, that still lags a bit, these leading indicators. In other words, you only find out about it a month or two after people get their finance. But what I guess I'm saying is that people, in general, get their finance before they look to buy a property. So increasing credit growth is a sign that down the track, more people are going to look for property, more people are going to buy property, and our property markets are going to move forward. Currently, APRA is relaxing borrowing requirements, plus the prospect of even lower interest rates in the future are all positive signs for property. At the same time, many Australians are going to have a little bit more cash in their pockets with tax refunds. And with the beginning of some wages growth in some sectors of our industry means that all put together serviceability is going to be better, affordability is going to be better. That's all good for our property markets. One of the other things we look at is market sentiment. Increased consumer and business confidence point to good times ahead. The clouds of the uncertainty that hung over many homeowners, property investors, business people before the federal election, that held people back. Home buyers and home sellers went on strike. Businesses stopped investing in inventory and employing people. But aren't things different now? Another fundamental we look at is supply and demand. And when we look at it that way, Australia's population growth is still growing faster than any other developed country. And this clearly fuels demand for property. Now, sure, we've got an oversupply of apartments in some locations, but we're slowly working through that. And with building approvals for future developments falling as developers are having more difficulty getting finance for new projects, having difficulty selling new projects, we're going to work our way into an undersupply situation in the future. But that's the way that property cycles always work, isn't it? So some of the metrics the research team at Metropole follow to keep an eye on the state of our property markets include, well, as I said a moment ago, housing credit growth being a leading indicator because this turns up as home buyers and investors look for more loans. Interestingly, Google searches make a difference. It's a sign of investor and home buyer confidence. The ANZ Bank has found that interest in property as measured by real estate searches on the internet is a good forward indicator. It actually shows you what's going to happen in the future. Important measures we look at are days on market, how long it takes to sell a home, and vendor discounting, how much of an incentive sellers have to give. Because as buyers return and properties sell more quickly, and sellers don't have to give as large incentives to sell their home, that will be a sign that the property market is starting to turn, and that will come before property values start to increase. Similarly, as our markets pick up, the number of transactions, the number of properties sold, and the number of new properties listed for sale is going to increase as buyers and sellers who've been sitting on the sidelines return to the markets. Now, rather than waiting for the reports of median prices, which only come to light sometimes months after properties have sold, it's quite a lagging indicator. We keep track of asking prices. Asking prices are a very accurate real-time indicator of what's happening in the market, and they closely track eventual selling prices. And of course, we also look at auction clearance rates. They're a good indicator of market confidence, particularly in the Melbourne and Sydney property markets. So, in my mind, now is a great time to make a countercyclical purchase in Sydney or Melbourne, or ride the property wave that started a little while ago in Brisbane. Good times are ahead, and all the fundamentals are pointing to rising property markets later this year, early next year. Rather than trying to be smart, rather than trying to pick the bottom, look, which after all is only one day, or I don't know, maybe 1 week or maybe 1 month, rather than trying to pick the bottom, now is the right time for long-term investors to buy investment-grade properties that are still on sale. That way, you're going to look really smart in 10 years' time when you look back and say, hey, gee, that property, that was a good buy. Look how much it's increased in value by. As I see it, there really hasn't been as good a time to buy countercyclically for over a decade. I know many of the clients of Metropole who made sound investment decisions 10 years ago at the end of the global financial crisis are looking back today and feeling pretty smug about themselves. In fact, we haven't seen Melbourne and Sydney property values fall to the extent they have since the recession we had to have in the early 1990s. They didn't fall as much as this in the global financial crisis 10, 11 years ago. So arguably, this is the best counter-cyclical opportunity to buy property for almost 30 years. But be careful. Our property markets are going to remain fragmented. Not all properties are going to make good investments. So therefore, correct property selection is necessary. And if you want to outperform the markets as they turn, as they move, you've got to buy what you've heard me say often, is an investment grade property. And currently, there's probably less than 5% of the properties on the market that I would class investment grade. So I explained a bit about the research we do in the big picture. And then what we do is choose the right suburbs, those that are going to outperform with regard to capital growth in the long term because of the demographics. Suburbs that are gentrifying, suburbs where people's wages growth is higher than average, where their disposable income is higher than average so they can push property values up. Then you've got to buy the right property in that area. And there's a lot of research going into which is the right sort of investment grade property. So if you'd like to have access to that research, if you'd like to have the team that does all this on your side, why not have a chat with my team at Metropole? We've got our own offices in Melbourne, Sydney and Brisbane. So we've got our own on-the-ground teams there, but we help clients from all over Australia. And how we help them? Well, some, they just need a $29 book, my book, but in fact we often give that to you for free anyway if you come and have a chat with us. And for others, we put together a strategic property plan. It gives you an idea of where you are now, where you want to be, how many properties you're going to need to get there. Wouldn't it be good to understand if you're on the right track? Wouldn't it be good to understand how much cash flow you've got? How valuable would it be for you to know what you've got to do next? Well, that's what a strategic property plan will do. And for others, they use our buyer's agency services, but we've never sold our property, so our advice is independent and unbiased, and our teams on the ground have the sort of perspective that you can't get when you fly in and fly out. We've been involved in over $3 billion worth of property transactions, and my team at Metropole would love to help you as well. So why not go to metropole.com.au, find out about what we do, leave your details, have a chat with our team. metropole.com.au.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Is fear holding you back in your career? Maybe it's in your relationships. Could be in your investment journey. Or maybe fear is stopping you achieving your dreams. Now, if this is the case, you're in good company. So I'd like to have a little chat with you in this mindset session about the common fears that hold people back. But before I start, I guess I should say you've probably had lots of people give you advice on getting past your fears, suggest that if you can break the shackles of fear, you're going to be unstoppable. Now, that's all well and good. It is important to master your fears in order to feel free, and you've got to master your fears to get things done. But I also want to tell you that a world without fear would be simultaneously more dangerous, less rewarding. I don't know, just plain flat. So given that we've spent so much time wishing that our fears would go away, so that we can get on with things, let's first of all have a quick look at why you may actually want to cultivate fear as a friend, not as an enemy. You see, fear is a great guide to opportunity. Think about it. Fear often shows you what's important, what matters to you. And if you didn't have fear to guide you, maybe you wouldn't know what's important. So maybe fear isn't that bad after all. And of course, fear motivates us into action. The way I see it, way back years ago, our ancestors who didn't run away in fear when they saw a saber-toothed tiger running at them simply just didn't survive to reproduce. So fear does call action into being, doesn't it? Now, most of us don't face serious physical threats from hungry tigers every day, but we do face them from, I don't know, crazy bosses, angry clients, the fear of public speaking. Now, that's very common, isn't it? Now, in those cases, our fear is still motivating us to do something, to enhance our chances of survival. The trick is to be able to transcend our primitive lizard brain and do something useful. Running away or throwing a spear may work on tigers. It doesn't actually work too well on your bus, does it? So what I'm trying to say is fear does have some uses because it actually lets you know that you're alive. That's why we like roller coasters. Anyway, I do, because they scare us, mostly in a safe way. Same with suspense movies and thrillers. So, yes, you do have to have some fear in life. But let's go through 9 of the common fears that could be holding you back from achieving what you deserve in life. And the first one I'd like to discuss is the fear of rejection, because many people avoid entering relationships or try to meet new people due to the fear of rejection. Whether you've got a fear of your boss declining a request for you to get a raise, or a fear that that attractive person won't go out on a date with you, don't let the fear of rejection hold you back. do it anyway. Of course, a big fear is the fear of failure. One of the top fears in the world is the fear of failure. Many people just won't try anything unless they're confident they can win. Failure is a normal part of our life. You've heard me say it over and over again in these sessions that I'm a real success at failing. I've just gotten up one more time because failure will similarly help you find your eventual success. People are also scared of uncertainty. They've got the fear of uncertainty and it prevents them from trying something different. They sometimes think, well, what if I wouldn't like it? This fear can prevent you from trying new things or doing things in a different way than you've always done them. As you see, I'm working through the common fears to see which of those may be affecting you and holding you back. If you talk about relationships, it's sometimes the fear of loneliness. Sometimes people stay in bad relationships or resist living alone because of their fear of loneliness. Learning how to tolerate feeling lonely and finding ways to keep yourself company could help you manage to get over loneliness. Of course, the big one is the fear of change. We don't like change, but in this rapidly changing world, it's something you've got to get used to. Many people resist change. Fear of change causes some people to become stagnant, and they miss out on a lot of the really great opportunities in life. Now, a big one is the fear of being judged. People worry that other people will think negatively of them, so they shy away from social opportunities or chances to advance their career. Now, people who adopt this fear, the fear of being judged, they often exaggerate how other people are going to perceive them. They think people are going to think negatively of them, talk behind their back, and they often underestimate their ability to tolerate not being well received by others. Let me put it this way. What other people think of you is none of your business. Clearly, another fear is the fear of something bad happening. Bad things happen to us all the time, though. It's inevitable. However, when people constantly fear something bad's going to happen, it often restricts their activities. They may avoid doing lots of things that they should be doing, or going to certain places, or taking on investments. Don't be scared of bad things happening. Do your homework, do your research, get on with it. Of course, another fear is the fear of getting hurt. None of us like getting hurt. If you didn't mind getting hurt, you wouldn't look both sides before you cross the road. However, a big fear of being emotionally hurt often stops people getting into the right sort of relationships or avoiding friendships or keeping family at arm's length. So think about what you're missing out on. Think about how realistic your fears are. But the big fear I come across with business people, entrepreneurs and investors, still said with the very, very successful investors we spend time with every year at Wealth Retreat, is the fear of inadequacy. It's a fear that all people seem to share, that feeling that we're just not good enough. And that allows us to pass up opportunities or decline the opportunity to go ahead and do things because you think you're inadequate or you don't deserve it. Often people overcompensate for their fears by trying to be a perfectionist. Perfectionism is really a fear of not getting it right, and then they get plagued by the thoughts that they just won't measure up to other people. So I guess what I'm trying to get at is fear is normal. Use fear to motivate you, to move you forward, to remain alive. Use fear as a guide towards what's important for you. And as I said, to motivate you to take action, to improve your odds, to give you a chance to get ahead. Don't let fear hold you back. I'd like to have a bit of a chat with you about some lessons that I learned having invested through a number of significant property cycles. I've been investing since the early 1970s, so as you can imagine, I've seen the ups, the downs, the stabilisation phases, the booms, but I've seen them come and go and repeat themselves. And currently a lot of people are a bit concerned in the property markets because they haven't seen these cycles before. So I'd like to share with you 10 lessons I learned in previous cycles. And the first one I'd like to discuss is that booms never last forever. Whether it's property, shares, economy, booms never last forever. The thing is, booms are just one part of the cycle. So they're always going to end at some point. Every boom sets us up for the next downturn. But just like every flat period provides opportunities to get set for the next upturn. Of course, the trick is to be prepared for the downturn when it comes and be ready to make most of the softer market conditions like we're experiencing in many locations around Australia today. Yes, I've seen the cycles recur. Summer is followed by autumn, followed by winter. We're experiencing a bit of winter now, and spring always follows winter. It has for thousands and thousands of years on the calendar. And I'm putting my money on that spring's going to follow winter in the property market this year too. The next lesson I'd like to share with you is that you should adhere to the strategy. Don't change your long-term strategy because of short-term factors. Look for what's always worked, rather than looking for something that's just working now. Long-term wealth is created through capital growth of residential real estate. You know that. Sure, cash flow is important. It's going to keep you in the game, but it is capital growth that's going to get you out of the rat race. Look, let's be honest, almost anyone could make money during the booms of a couple of years ago because the market covered up mistakes. But as Warren Buffett said, you only find out who's swimming naked when the tide goes out. In other words, if you're not following a strategy that works in all market conditions, you're going to get caught naked when the market changes. Another lesson I'd like to share with you is that getting rich quick is getting poor quick. Successful property investment, it takes time. So be wary of this new breed of spruikers who are out there at the moment trying to lure the uneducated into parting with their money by offering them shortcuts to riches. It doesn't work that way. So I guess that follows into the next lesson, which is you've got to take a long-term perspective. There's no doubt that during difficult times with all the negative headlines, fear rears its head. People who've made poor investment decisions or those who bought near the top of the market, they tend to worry, they tend to panic a bit. But let's face it, emotions of any kind are not particularly good when you're investing. The secret's to keep your eye on the long-term horizon and not worry too much about the short-term ups and downs of the market because they're going to pass. And unless you're planning to sell, it doesn't really matter what's happening to the value of your property because who wouldn't have liked to buy the property their parents bought, 20, 30 years ago at the price they paid then? So just keep an eye on the long term. Just looking back 10 years ago, 11 years ago, during the global financial crisis, when everyone was concerned, I just know so many clients we bought properties for then, and the value of their properties have gone up so much. And even if they've gone back a little bit in the last little while, look where they are today. Of course, an important lesson to remember is that property investment's a game of finance with some houses thrown in the middle. Strategic investors don't only buy real estate, they buy themselves time by having financial structures in place, cash flow buffers, or things like that to ride through the cycle. Now, an important lesson I've learned over the years is invest in locations with a future, not a past. Since the bulk of your property investment's performance is going to be determined by its location, rather than looking for somewhere cheap to buy, find a location where the local economic growth is going to lead to jobs growth, which is going to lead to wages growth, it's going to lead to population growth because people are going to go there. A suburb with a local demographic that can afford to and willing to buy properties is the right place to buy because that's where people end up having high disposable incomes. In the future, wages growth isn't going to be as high, and many jobs are going to disappear to artificial intelligence, to robots, and manufacturing jobs overseas. So the gap between wages growth in some areas and others is going to only widen. So in the more of the outer suburbs and the blue-collar areas, and this is no disrespect to the people who are living there, but it's just a fact that their wages aren't going to go up as much, which is going to place a ceiling on the amount of capital growth that you can get there. So the roller coaster ride won't be as dramatic if you choose well-researched locations where people's disposable income is higher. Last time round in the boom time, some of the hotspots didn't have the underlying economic strength, and that left investors gasping for air during this downturn. Yet those who bought in locations based on strong economic fundamentals and research, look, they may not have had as dramatic an upswing during the boom, but their downside's been minimised over the last year or two. Another lesson the market's taught me is that you know less than you think. Sure, a healthy ego can be a good signal for future success. However, an overinflated ego will usually mean you end up worse off than when you started. If you're the smartest person in your team, you're in trouble. So recognize that mentors and experts can help teach you things that you didn't know. In fact, things you didn't even know you didn't know. So get a good team of people around you. It's just too hard to do it on your own. By the time you know all the information, the market will have moved again. Get other people who know the information that you don't know. Of course, a lesson I learned along the way is you shouldn't mistake money for wealth. A big bank balance doesn't necessarily mean you're rich. Many high-income earners I come across live from one payday to another. They've never really got enough money left over to invest in income-producing assets. So true wealth hasn't got to do with how much money you've got or how many properties you've got, of course, anyway. It's what you're left with when you lose it all. So money's important in those areas where it's important, and it's not at all important in parts of your life where it's not important. So true wealth is really having health, having time to appreciate your life, having family and loved ones and friends, having the ability to contribute back to society, to communities. That's where true happiness lies. Another lesson to learn is when good times seemingly turn bad, property pessimists and doomsayers come to the fore. You're going to get lots of negative news. These commentators predict the end of the financial world. We should sell everything up. We should hide under a rock. On the other hand, sophisticated investors ignore all that white noise because they're concentrating on the long term. And that's where the view is calm and clear. So don't make 30-year investment decisions on the last 30 minutes of news. And I guess the last lesson I'd like to share with you is that opportunity is knocking. And when it does strike, remember Warren Buffett's words, be fearful when others are greedy and be greedy when others are fearful. Sure, it's difficult to take action when others around you are talking doom and gloom, but it's during these downturns that lifetime wealth is created. So putting all this together, it's important to recognise that strategic investors don't really care too much about the market phases. Instead, they concentrate on growing their portfolios, investing in the right type of properties, not because of the timing of the cycle, but when it suits them, when their finance is right, when the strategy is right. Just they keep going along in their long-term goals. That way, when everyone's hunkered down for the property winter, they're basking in the sunlight of their future wealth creation. When there's less demand for something, when there's less competition, it should mean lower prices. So while investment-grade properties always attract demand, sometimes when the majority of the market's fearful, you can buy well. You can buy the property that you had a lot of competition for a while ago. Then, because your property is going to be located in a good area, one with above-average growth, you're going to be able to maybe add value through some renovations, and your property is soon going to be worth much, much more than you paid, regardless of the market conditions. So if you're wanting to take advantage of the current property markets, but you're not too sure, you don't have the experience, if you're wanting to start off, or if you're an experienced investor, why not have a chat with the team at Metropole to help you get to the next level? We have no properties for sale. We've never sold properties, but we're going to sit down with you and work out where you are, where you want to go, and put together a strategic property plan for you. It will tell you what's possible. It'll tell you what's realistic. It'll tell you if you're heading in the right direction. Wouldn't that be worth it? So just go to metropole.com.au and leave your details and we'll be in contact with you. metropole.com.au or 1300 Metropole, and I'd love to be part of your wealth creation journey. Well, clearly we're in for some good times for our property markets. So I hope you learned something today to help you take advantage of some of the best countercyclical opportunities in the last decade. Or in fact, as I said earlier on, probably the best countercyclical buying opportunity since the early 1990s. If you did get some benefit, tell somebody about this. At the bottom of every podcast app, there's a share button. Let somebody know about it, or even tell them, tweet them, ring them, whatever, because just like I'm trying to help you become more successful in property, success, money, I'd like you to pass the message on as well. As do every week a number of people who give us great podcast reviews. So I'm going to read 2 out today. And if it's your review that I read out, please email me, michael@metropole.com.au, and I'd be more than happy to give you one of my books. And Tony sent an email earlier this year saying, inspired, motivated, and ready to delve into a bigger, better, and more prosperous year. I'm so grateful that I've stumbled across these podcast gold nuggets. This year I have massive vision boards structured around a lot of what I've been learning from these podcasts, so I'm so happy to kick off the new year. Now remember, this is actually an old one, an old review. I just stumbled across it. I can't read them all. There are so many of them. But anyway, Tony said he's got a great 2019 planned out. Definitely recommend for anyone who wants to better themselves. Well, Tony, sorry it's taken a while to get to read your review, but if you would like to email me, I'd be happy to make your year even better by gifting you one of my books, michael@metropole.com.au. And Sean MB also left a review earlier this year saying, Michael, I've listened to all your podcasts twice over various platforms. That's how informative and educational I find them as a beginner getting ready to enter the market. They make my Melbourne traffic and my commute to and from work bearable, so thank you. Also, the Property Review app is a goldmine for information. I think he means the Property Update app for those who haven't downloaded, and I strongly suggest they do. Many thanks, Sean. So yes, there is a Property Update app so that you can keep up to date. You can even listen to the podcast on the Property Update app. So if you go to my Property Update blog, my newsletter where you're going to get articles from Australia's leading property experts, you can download the app and listen on the go, read on the go, keep up to date on the go. And I look forward to being with you again real soon. Remember, this podcast now comes to you twice a week. So in the meantime, spend your time wisely.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?